Welcome to Trading Lounge for the 8th of May and the SP 500. The count that I've got moving to the upside here, I've got it in two ways. I've got it here in terms of wave 1 and 2 here, and 1 and 2 and 3 and 4 here, and then going up for 5 here of 3 here, and that would leave us with wave 1 here, wave 2 here, wave 3 here, wave 4 here, and pushing up for wave 5 of 3. This would be in line with the Asian markets, so I'm okay with that. The other count here, of course, is, which we'll have a look at the 4-hour chart, is where we have wave 3 over here, and wave 4 here, and wave 5 sitting over here like this here. And that's on the 4-hour chart. We'll have a look at that in a moment. And then if that's the case, then this wave 4 here can come back to this wave 4 of 1 lesser degree, which we discussed the other day. But I'm just going to leave this chart here for the moment, and we can have a look at that alternative count. So really we need to see the market push up from here. I'm quite sort of happy with that count. Yeah, so on the 4-hour chart, however, would have that wave 3 here in place here, and that works out okay as well. Like I mentioned before, is that the 38.2% retracement level is down here. So as this wave 4, it can move down to this space here. Okay, let's just go to the hourly chart and just sort of have a look at this pattern and start drilling in on it. So it's a little bit tricky, but from the top here, we could look at this as an A wave, as 3 waves or 5 waves, a B wave here, because it's actually up in an ABC pattern here. It moved a little bit higher than the 61.8% mark that we're looking at. So I was thinking that, I mean, we could look at this in more of a bearish pattern here as well, but as a corrective pattern, we can look at it as an A wave, a B wave, and a C wave for wave A. And then up here for a B wave here at 61.8%, as mentioned last time, and then the move down through here. Now, the move down through here, I've got it here. I can count, when I look at it, it's a bit weird, because when I look at it on the 1-hour chart here, I can see that from this top here, we've got 1 and 2, nice strong 3rd wave down here, 4th wave, and a 5th wave down here. So we've got 5 waves in that sequence. If that was the case, then we would need to look at this as wave 1 here, wave 2 here, wave 3 here, wave 4 here. That dotted line here is the 38.2% retracement level, and then down here for wave 5, which will take us to the midpoint here at the 50. Okay, then we can come up from that point. We could also be in a larger bearish pattern here too, in terms of having this down, well, on more of a bearish pattern. We could look at this as the A wave to here, the B wave to here, and then looking at this here as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 coming down here even further. So that's also possible as well at this stage. So on the upside, we can only turn bullish if 2900 becomes the support. That's yeah, I mean, it's just that sort of simple, really. So even, you know, trading above the 29 is not support, is it? So we would need to be looking, if I can just draw over here for a moment and expand that up. If the market moved up here, then it would move up. There would be a reaction from this space here, and then back down, and then we need that very clear first high above the level, and then there would be some type of correction here, and then a push up. So before we went long for a longer term trend, we would need to be on top of the high on 2900 here. So that would be the safe trade to the upside. While we're under the closest largest number, which is this one here, then we're in bearish mode, really, aren't we? So, because that's where the weight is. Also too, with the 2900, we can go to the next degree smaller, which is group 1 above, 1, 2 and 3, 10, 20 and 30, and below here we've got 80, 72 and 65. So this normally acts as the support for this range here. So if we say that the market's vibrating at 2900 here, then the normal thing is, using the trading levels, if we get support on top of 30, well, then we know that the market's going to go up from that point and it will be leaving the 2900. And the same thing for the downside here as well. If group 2 here, and normally we use the 72 here, if that become the retested resistance, then we know that the market is leaving the 2900 and will be moving down to the next level. So at this stage here, we don't have group 2 here as the resistance. We have it as support at this stage. It's only in its early stages, because if this count here as 1 and 2 and 3 here is right, then we will have 4 here, which is coming back here now, and then fold down here to the next level here. At that point there, it's probably finished. But I still wouldn't be able to confirm it unless I had 5 waves up here and then an ABC that came back here, and then we could push off from that point. But we're not there yet. So when we have a look at the interesting thing is, when I have a look at the tick chart, I can count 5 waves from wave B here down to wave C here. So if I can just go to the tick chart here, I think I've got it on this chart. I might have to go to another one. So from wave B here, I can count 1, and that's actually on that one there in the middle, a little A, B and C here for wave 2, and I can count 5 waves down here, and then an A and a B and a C for wave 4, and then down for wave 5. Wave 5 doesn't count very nicely actually, but still I can get that 5 waves from B to C here. So it's quite possible that we've got a low in place. And the current move up through here is in 5 waves up here. So that's promising. So if we take this low here and this high here, then this 50-60% retracement level is here within group 2 here. But if the 2872 became the retested resistance, then you would need to turn bearish from that point. Okay, we're kind of expecting 5 waves up, so 3 waves back down into this space, and then it can push up from that point. Okay, but if that 72 becomes the retested resistance, then you know that we're in bearish mode at that point, and would be looking down at the 2850 at that point. Okay, so just be mindful of that. But I don't know if we can push it past that point, because this other point here, that when I said wave 4 and wave 5 doesn't count very nicely here, because we could look at this as wave 1 here, wave 2 here, but then this as a third wave here. It's doable. It's doable because then wave 5 is actually quite short as well here. But what I've been noticing here is that from this low here, we've got this A, B and C over here. So it might be possible that this could count differently. If I counted, well, I could count, just put that here, and then this here would be the A wave here, a B wave down here, and a C wave here, and that's why it can fail. So C wave's got 5 waves in it, so that's why it can fail at that point there. And I've sort of been through this on as 100 ticks, and this is 20 ticks here. So just to give you a bit of shape here, wave 1 to here, wave 2 to here, and then we've got wave 1 to this point and wave 2 to here, 1, 2, 3, 4 and 5 for the third wave. And the same thing here again, as an A and a B and a C for the fourth wave here. So that kind of pattern here, if I can just, that A, B and C here for that one there is a kind of the same as this one here, because then we got 5 waves down here, and then we can look at this as the A wave here, the B wave down, that goes over there, B wave to here and a C wave to here, and then wave 5 here. So this could also be an A wave to here, a B wave to here, and a C wave to here. So that's where the trap is here. And that's why I say that I think we should just give this a little bit more time to play out here. The interesting thing here though is this 5 waves here, it can pull back into this space here, the 61.8% retracement level, but below that would make it bearish at that point. But if it folds back down as an ABC to here and then starts pushing back up here, then you could take that high here and that low here and find the 61.8% within this space here, and then look to go long above that, because then that would take you higher at that point. You'd still have trouble at the 29, but you could get in earlier at that point. I'll move this out of the way here a little bit, and we'll take this back to the hourly chart here. So going back over this a little bit, just to recap here a bit, because we've been through a little bit here. First of all, from wave B here down to wave C, I can count 5 waves here. And if that's the case, then we should find support on top of 2900 here. And if that's the case, wait for the first high above the level to come into play. And once the first high above the level's in play, then just wait, and then that will trigger the long trades to the upside. So that's taken care of the long side. To the downside here, if the 2872 becomes the retested resistance, then you can short from that point, because we'll be going down to the 2850. But if that's the case at 2850, we're going to come back up to the wave 4 of 1 lesser degree again into this space here, and then down again here as well. So it's only a quick short trade in this space here. You could turn around and trade long off this here, but this wave 4 here will be a little bit complicated here as well. So I'm not much of a help today with all this, but this is wave 4s. Wave 4s are normally tricky, and then we've got Trump being an idiot again, and I shouldn't talk politics when I talk markets. Religion and politics we need to leave out of it. But I mean, the comedian's having a funny time with them, so that's fair enough. It's good enough. So let's just see how we go here. But as I mentioned, the bias is bearish because we're under the closest, largest number here. If this becomes support here, then we know that this is finished at this point. That's what we're looking for here. So look, I'm sorry, but there's just too many options open here at the moment. So that's about the best I can do at this stage. Alrighty, cheers.